What if I told you XRP is sitting right now at a make or break level that could decide the next major move for months? And almost nobody is talking about how tight this setup actually is, because the chart is quietly compressing while emotions are cooling and smart money is watching very closely. And if you blink, you might miss the moment everything changes. Welcome back to XRP Insider Network. This is the channel where we cut through the noise, track the levels that actually matter, and connect the dots most people overlook. So make sure you smash that like button, subscribe, and turn on notifications so you don't miss what could be a critical window for XRP holders. Now let's get straight into it, because right now XRP is trading in a very specific zone where support and resistance are squeezing price tighter and tighter. And historically, these types of conditions do not last forever. At the moment, XRP is holding above the psychologically important $2 level. And this number is not just a random round figure. It represents a line in the sand where buyers have consistently stepped in to defend price. Every time XRP dips toward that $2 area, demand shows up, which tells us there is still strong interest at these levels. Just below that, the next meaningful support band sits roughly between $1.96 and $1.98. And this is where we've seen previous reactions, wicks, and bounce attempts, meaning if $2 were to crack briefly, this is the zone traders would be watching for a reclaim. Below that, there's a deeper support pocket in the 180 to 190 region, which would likely only come into play if broader market sentiment turns sharply negative or if there's a sudden macro shock. But as of now, XRP is not showing panic behavior. It's showing consolidation behavior, and that distinction matters a lot. Consolidation above support is often not weakness, it's preparation. On the upside, however, XRP is clearly capped by layered resistance, and this is where a lot of frustration comes in for holders. The first resistance band sits around 210 to 220, and you've probably noticed how price keeps stalling there, rejecting, pulling back, and then trying again. That's short-term supply getting unloaded. Above that, the 225 to 230 area has acted like a ceiling, and this is a zone where sellers have repeatedly stepped in with conviction. Beyond that, the bigger wall comes in between roughly 240 and 260, where moving averages and previous distribution zones line up, creating a heavier barrier that XRP hasn't been able to convincingly break and hold yet. This is important, because a true breakout is not just about spiking above resistance for a few minutes. It's about closing above it, holding it, and flipping it into support. Without that confirmation, rallies tend to fade. Now here's where things get interesting, and this is where you really want to pay attention. When price is trapped between a strong support zone and a strong resistance zone, and the range keeps tightening, the market is essentially coiling like a spring. Volume typically dries up, volatility compresses, and then when a catalyst hits, the move can be sudden and aggressive. In XRP's case, a short-term breakout signal would likely come from a clean daily close above roughly 230 to 240 with noticeable volume expansion. That would suggest buyers are finally overpowering sellers in that region. A more powerful confirmation would be a sustained move above 260 to 280, because that would signal that XRP has cleared multiple layers of resistance and could start targeting much higher psychological levels again. Until that happens, what we're seeing is not failure, it's balance. Buyers and sellers are negotiating price. And historically, periods like this often precede strong directional moves. This is why it's so important not to get emotionally shaken by every small red or green candle. The structure matters more than the noise. And before we go deeper, quick reminder. This is not financial advice. This is market commentary, an analysis meant to help you understand the bigger picture so you can make your own informed decisions. If this breakdown is helping you see the chart more clearly, take a second to like the video and drop a comment, because engagement tells the algorithm to push this information out to more XRP holders who need it. Now let's talk about timing, expectations, and what could realistically trigger the next major move, because that's where most people either get overly bullish or overly bearish at exactly the wrong moment. When it comes to timing a breakout, the uncomfortable truth is that charts don't run on calendars, they run on pressure, and right now XRP is building pressure through compression rather than momentum, which means the breakout could come sooner than expected, or after one final shakeout designed to test conviction. What traders and long-term holders alike should be watching is not just price, but behavior. Is volume expanding on green candles? Are pullbacks getting shallower? Is support being defended faster each time price dips? These are the subtle signals that often appear before a breakout actually shows up on headlines. A short-term bullish scenario would look like this. XRP continues to hold above $2, consolidates slightly, and then pushes through the 230 to 240 zone with a strong daily close and follow-through buying. That would likely trigger sideline buyers, short covering, and momentum traders stepping in, potentially driving price toward the 260 to 280 range relatively quickly. From there, the market would reassess, but the narrative would shift from stuck to breaking out. On the flip side, a bearish scenario doesn't necessarily mean collapse. If XRP loses the $2 level and fails to reclaim it quickly, price could drift down toward the 190 or 180 support zones, where buyers would likely attempt another defense. Even that scenario would still be part of a larger consolidation unless we see high volume selling and broader market weakness. This is why context matters so much. Many people mistake sideways action for failure, but in reality, markets often move sideways longer than people expect, precisely to exhaust emotional traders before making a decisive move. What makes this moment especially interesting is that XRP is not alone in this behavior. Many large-cap crypto assets are also compressing, suggesting the market as a whole is waiting for a catalyst. That catalyst could be macro-related, regulatory-related, or simply liquidity returning to the market. When it hits, assets with clearly defined support and resistance structures tend to react the fastest. XRP's current structure is clean, visible, and well-defined, which is why so many eyes are quietly on this chart right now. The biggest mistake traders make at moments like this is over-leveraging or over-committing based on anticipation instead of confirmation. Breakouts are best traded after they happen, not before. Patience is a strategy, even if it doesn't feel exciting. As XRP continues to coil between support and resistance, every day that passes without a breakdown increases the probability of a resolution to the upside. But probability is not certainty. That's why risk management always matters more than predictions. If you're still here watching, you're already ahead of most people who only show up after the move is over. Make sure you're subscribed to XRP Insider Network, because we'll be tracking these levels closely as price approaches decision points. And when the breakout finally comes, you'll want to understand not just that it happened, but why it happened. The chart is talking, pressure is building, and the next chapter for XRP will not be written in a straight line, but it will be decisive. Stay sharp, stay patient, and stay informed.